All right, get ready, because today we are taking a deep dive into the world of IPOs.
Oh, yeah.
Specifically,
IPOs.
Swiggy's upcoming debut on the Indian stock market.
That's right.
We're talking big moves in the Indian tech and food delivery scene.
Absolutely. And you know what's so fascinating about this?
What's that?
Is the sheer scale of this IPO.
Right?
Swiggy's aiming to raise
Huge.
11,327.43 crores.
Wow.
Over $1 billion US.
That's a lot of non.
It is.
And luckily, we have chittorguard.com giving us all the details.
Great source.
So for anyone who maybe isn't super familiar with IPOs,
Right.
Swiggy is currently a privately held company.
Uh-huh.
And going public means they're selling shares of ownership to raise capital.
Yeah.
It's a big sign of how much they want to grow.
It is. It really signals growth and ambition when a company decides to go public.
So the dates to watch are November 6th to 8th.
Mm-hmm.
Shares hit the Indian stock exchanges on November 13th.
BSE and NSE.
And there are two parts to this IPO.
Okay.
Newly issued shares.
Fresh capital for Swiggy.
And then shares being sold by existing investors.
Exactly. So it's a chance for those early backers to maybe cash out a bit.
All right, so let's get into the numbers.
Yeah, let's talk numbers.
The price band is between 371 to 390.71 per share.
Per share,
And you have to buy them in lots of at least 38 shares.
38 minimum.
So hypothetically, even you listening right now could become a Swiggy shareholder.
That's right.
But what are investors actually buying into here?
That's the big question, right? Because this is more than just your average food delivery app.
Right.
They've moved into grocery delivery with Instamart.
Interesting.
They've got their B2B services.
Oh, yeah, I forgot about that.
And they're even dabbling in things like event bookings.
Event booking.
Yeah, it's pretty diverse.
So they're building a whole ecosystem around convenience,
Exactly.
like on-demand everything.
It's what makes this IPO so interesting.
Okay.
It's not just about food delivery anymore.
It's like a bet on Swiggy dominating all these different sectors.
Right, and they're pretty serious about it, too.
How so?
We'll take Instamart, for example.
Right.
They've got over 600 dark stores.
Wait, what are dark stores?
They're basically warehouses.
Warehouses.
Yeah, but specifically designed for online orders.
So nobody's actually going in there to shop.
Nope, just a super efficient system for getting groceries picked, packed, and out the door.
That's wild.
It really shows how tech is changing retail.
It's all about speed
Yeah.
in this on-demand economy.
You got it.
But we got to talk about the financials, too.
Oh, yes, the numbers?
Swiggy's revenue grew 34% last year,
Solid growth.
but they're still operating at a loss.
Right, and that's a detail potential investors will want to pay close attention to.
Why is this such a big deal?
Well, because it means they're spending more than they're earning.
Oh, okay.
Now, it's not necessarily a bad thing, especially for a fast-growing tech company.
Right, like they're putting money back into expanding and all those new ventures.
Exactly. It's like investing in their own future.
But investors need to figure out if these losses are sustainable.
Yeah. Are they just spending aggressively?
Or is it a sign that something's not working?
It's the million-dollar question.
Definitely something to think about.
Absolutely.
Okay, so we've talked about Swiggy's ambitions and their vision,
Gig plans.
but they're also operating at a loss.
Right.
So how are they planning to turn that around?
Well, luckily, we've got some insight into their game plan,
Oh, good.
thanks to chittorguard.com.
They've laid out some specific objectives for those IPO funds.
They have, and a big chunk of that money
Yeah.
is going towards Scootsy,
Scootsy.
their premium food delivery service.
Oh, I always thought that was just part of Swiggy.
Nope, it's a separate subsidiary.
Interesting.
And by investing more in Scootsy,
Yes.
Swiggy showing they want to capture a more high-end market.
So gourmet meals, artisanal treats.
Exactly, the fancy stuff.
So they're diversifying their offerings.
Smart move.
What else are they planning to spend on?
Well, they're also significantly expanding their dark store network for Instamart.
Those super efficient warehouses.
Yep, those are key to their quick commerce goals.
The faster they can get those groceries delivered,
The better.
it's all about speed.
Speed and logistics.
And that takes a lot of investment.
It does. Building all those dark stores isn't cheap.
But they clearly see it as a good investment.
They do.
But it's not all about physical infrastructure, right?
No, technology is a huge part of this, too.
Of course.
So they're also putting a good amount of money towards their tech and cloud infrastructure.
Because a smooth user experience is key.
It is. Nobody wants a glitchy app when they're hungry.
Exactly.
And a good cloud infrastructure lets them handle all those orders and data.
It's like upgrading the engine of a race car.
You got it. They need that power to stay ahead.
So it sounds like they have a solid plan.
It seems that way.
But even the best plans can go wrong.
That's true.
What are some challenges they might run into?
Well, one word: competition. India's food delivery market is fierce,
So many players.
and Swiggy can't afford to slow down.
They have to keep innovating and keep prices competitive.
And the service has to be top-notch.
Otherwise, customers will go elsewhere.
Exactly.
And what about regulations?
Oh, that's a good point.
We've seen governments taking a closer look at the gig economy.
Right, and that could have a big impact on Swiggy.
Like if they have to provide more benefits for delivery partners.
That could cut into their profits.
And we can't forget about the economy in general.
Right. Inflation, rising interest rates.
Those could all affect Swiggy's plans.
Absolutely. They're like unpredictable weather.
Sometimes it's smooth sailing.
Okay.
Sometimes there's a storm.
Swiggy needs to be ready for anything.
So this IPO is a bit of a gamble for them.
It is. There's risk and reward.
They have a strong brand and a good vision.
But they also face tough competition and unpredictable factors.
It'll be interesting to see what happens.
Only time will tell.
Welcome back to the show.
Glad to be here.
We spent the last two parts really digging into Swiggy's IPO.
The numbers, the plans, the challenges.
But now I want to shift gears a little
Okay.
and talk about the people involved.
The human element.
Exactly. It's easy to get lost in the financials
Right.
and forget about the individuals.
Who are actually affected by all of this?
So let's start with the delivery partners.
The heart and soul of the operation.
They're the ones out there in the thick of it,
Breathing the traffic, the weather.
making sure our food gets to us,
Hot and fresh.
and their well-being is tied to Swiggy's success.
This is where the gig economy gets really interesting.
Okay, what makes it so interesting?
Well, you have this flexibility that traditional jobs don't offer.
Right, like setting your own hours.
Being your own boss.
That sounds appealing.
It does to a lot of people.
But I imagine there are downsides too.
Oh, definitely.
Like what?
Well, job security is a big one.
Makes sense.
No, guaranteed income.
And you're at the mercy of the algorithms.
Exactly.
And what about benefits?
Like health insurance, retirement plans.
Those are usually missing in the gig economy.
Right.
So it's a trade-off.
Flexibility versus stability.
Where does Swiggy stand on all of this?
That's the question a lot of people are asking.
Are they doing anything to address these concerns?
Well, the IPO could give them more resources.
To invest in their delivery partners?
Maybe offer training programs, accident insurance.
Those will be good steps.
That'll be interesting to see how they handle it.
And we can't forget about the restaurants either.
The other side of the coin.
For a lot of small businesses,
Yeah.
platforms like Swiggy have been a game changer.
Especially after the pandemic.
When dine-in options were limited,
They needed a new way to reach customers.
it's like having a digital storefront.
Always open.
But there must be challenges too.
Oh, there are.
Like what?
Those commissions can be a big expense.
Especially for restaurants with tight margins.
And then there's the competition.
So many restaurants vying for attention.
It's tough to stand out.
It's a balancing act, for sure.
Weighing the benefits against the costs.
And let's not forget the most important stakeholder,
Who's that?
the customer,
Ah, yes, us.
the hungry masses.
We're the ones who drive this whole industry.
But beyond convenience and choice,
Yeah.
what are the bigger implications of this on-demand culture?
That's a great point. It changes our eating habits,
Our connection to local communities.
even our personal finances.
Do we always need to order in?
Are we spending too much on delivery fees?
Are we missing out on the social aspect of dining in?
It's about finding that balance.
Convenience versus mindful consumption.
Supporting local businesses, but enjoying the ease of delivery.
It's a complex issue.
It is.
So as we wrap up this deep dive into Swiggy's IPO,
Mm-hmm.
we're left with a lot to think about.
A lot to ponder.
It's a story of ambition and growth.
But also one that makes us think about the bigger picture.
Labor practices, business models.
The impact of technology.
It's more than just a financial analysis.
It is.
It's an invitation to engage with the world around us
To consider different perspective.
and to think critically about our choices.
Well said.
Thanks for joining us on this journey.
It's been a pleasure.